In this video, I will be showing you step by step a rule-based 5 minutes scalping strategy that I use to scalp gold, euro dollar, GBP pairs and many others volatile currencies as well as indices. Now before I begin, there is a warning. Keep in mind that scalping is not for everyone. Some people born as a scalper, but if you think that you are not a scalper, I suggest you to gently skip this video and watch many others video in this channel that will help you in your trading. But if you think that you are a scalper, then stick till the end. Don't skip any part of this video. At the end of this video, I have a giveaway. So make sure you stick till the end, watch this with full attention so that you can scalp the market the way I do whenever the market is volatile. Smash the like button before I begin. This is Forex Wizard from Forex Trading Wizard Academy. Make sure you hit the subscribe button if you haven't done yet. Press that bell notification so that you don't miss out any of these kind of strategies, educational content, live analysis and live streaming that I am doing every single day. With that being said, let's get started. Okay guys and girls, this is a simple strategy. Just pay attention and then we'll go through the actual chart. We'll do quite a few examples so that you can program your mind to apply this strategy. So first of all, we'll look for one kind of, this is simple rules as I told you. Just pay attention. So first we'll see the rules of the strategy, then we'll go to the chart to see how we can apply that. Simple rules. Firstly, you need to look for trend. Let's say we first consider downtrend. Now we will be using only two time frame for this strategy, only two time frame, 4 hour and 5 minutes. Okay, so we'll be scalping on 5 minutes, but we will be using 4 hour for the direction of the trend. Okay, first thing, we need to find out the direction of the trend on the 4 hour. And the next thing what we will be doing is once we find the direction of the trend, we will be waiting for a bearish engulfer to be formed on the 4 hour time frame on a level of resistance. Now the resistance doesn't have to be a key level, just a simple resistance, but this bearish engulfer has to be in a specific way. This bearish engulfer must be the high of the bearish engulfer must cross the previous candle's high completely, and a low of the bearish engulfer must cross the previous candle's low completely, and the close of the bearish engulfer must pass the previous candle's close. You know, write it down. I will give you the giveaway where you will find it, but pay attention that this condition must be fulfilled to consider this bearish engulfer on the 4 hour time frame. Once you found this bearish engulfer, lock the door, turn off the mobile phone and turn off the light. We'll go to the 5 minutes time frame, started to scalp the market. So once you found this a bearish engulfer on the 4 hour time frame, we'll go to the 5 minutes time frame, and then now the next I will explain in the real chart what we will do in this 5 minutes time frame. So we'll be starting first with gold. As you know that gold is very volatile, and this strategy really works good at gold in all currency pairs. Let's start with gold and we'll see other currency pairs as well. So what you see that this is the gold, this is 4 hour time frame. Now in this 4 hour time frame, first of all, find the direction of the trend. You saw that the price was creating a series of higher high and higher low, so it's an uptrending market. Now at some point what happened, the market structure is broken, breakdown, created a head and shoulder here. So created a head and shoulder and the price broke down. So once it has created a reversal pattern in this uptrend, broke down, so it started to trend down now. So now the direction of the trend is down because there has been a reversal pattern. The price changed its trend to the downside. So it is now a downtrending market. So you found the downtrending market on the 4 hour. What is the next thing? Patience. Patience pays off. Always stay patient. Okay, if you are impatient, keep in mind this is scalping. You lose money. You have to be patient. Now the next thing is just wait for a candle to be formed exactly the way we want it. So replay the chart, see if we can find it just as a sake of our example. So let's see. Okay, we got exactly what we are looking for. Look at this 4 hour bearish candle. You see, this is the recent chart. This candle crossed the previous one completely on the top side and also crossed the previous one completely on the bottom side and also closed the previous candles completely past. So we found bearish engulfer, we found trend, we found the local resistance where this bearish engulfer is formed. You saw that this is quite a few candles together created a level of resistance. That is what we wanted. So we found everything. Next thing is now jump onto 5 minutes time frame. Get ready to scalp gold. So go to the 5 minute time frame. Now what you saw that in this 5 minute time frame, see, now once you go to the 5 minutes time frame, very simple. As soon as you go to the candle close, you found bearish engulfer, don't enter the trade. Go to the 5 minute time frame and then see the structure. You will see on the 5 minute time frame a structure. This is a bearish structure. Okay, always keep in mind, once you went to the 5 minute time frame, first thing you need to do is pay attention to the structure. This is the structure. Okay, so what kind of structure it is? Anybody can tell this is a bearish structure. When you see this kind of structure, what is likely to happen? You might see a false breakout to the upside and then finally breaking down, or even without false breakout, it may start to break down. Okay, so once you found this any kind in the 5 minutes, the structure you identified, the next thing you will be waiting is breakout from this structure. As you have seen that you have found a bearish engulfer on the 4 hour time frame, the next thing is to happen that this price likely to drop. So that's why we will be waiting for a breakout from this 5 minutes structure. Until it breaks out, never enter any trade because it may start to go up and start to move up again. So once it will break out from this 5 minutes structure, then we will place our pending order on the retest of this previous support as a resistance. So let's see what happened. Okay, you saw that with this red candle the price is trying to push down, but this is 5 minutes time frame. You see that the price still didn't make it through from this structure. It didn't break out completely. Let's see one. Okay, now with the next candle, what we have seen that the price breakout of this structure completely. Still, don't be impatient. Don't sell by market. Okay, the price is breaking. Don't experience FOMO. Okay, just what you will do is place your pending order just below this structure level, keeping your stop loss always above all this structure, and then you will target at least 1 to 3 risk to reward ratio. Now let's replay the chart. Now the next one, you see the next one came down, went above. That's what happened. It will go down. You will feel like, okay, I'm missing the trade, but ultimately it went above to test this support here. You see this is a long support of this structure as a resistance, and let's see what happened next. Okay, and the next one immediately came back, hit your profit target 1 to 3 risk to reward ratio. Smash the like button now. Let's see another example on this downtrending market. Okay. Okay guys and girls, so let's see another example on gold. This is also 4-hour time frame, and also this is also bearish market. As you have seen that the price was moving to the upside, creating a series of higher high and higher low, and the price created a double top here, broke down, retraced. Now we saw that another break to the downside, so it is started to trending to the downside from here. So as I told you, we will be considering only 4-hour time frame for finding the direction of the trend and also finding the level of resistance for this bearish engulfer. So what we see now, the price is breaking, so let's see if we can find the one that we are looking for. Okay, and then okay, so we found exactly what we are looking for. You see this red candle, this is the direction of the trend is down, and there is a nice bearish engulfer, crossed the one's high, crossed the low, and closed past the previous one completely. It's a nice healthy bearish engulfer in this local level of resistance. So we have found everything according to the rules of our strategy. So what is next? Jump on to 5 minutes time frame, go to the 5 minutes. Now this is the 5 minutes. So before we go to the 5 minutes, one thing we will do, we will zone out this candle so that we know that what is the range of this 4-hour candle that we are targeting. So we found, now this is the 5 minutes time frame. So once you found the 5 minutes time frame, what is the next task is to determine the structure of this market. So what you saw that, see, if you consider this is basically a bearish market structure starting from you here, what you saw, a big impulse. Now it is creating a triangular pattern. You see, this is the triangular pattern. Okay, so an impulse followed by a triangular pattern, market always moves like that. So until we see a clear breakout of this structure from even this level as well, we will not be considering any shorting opportunity. So once you found the 5 minutes time frame, the next thing you will do is you will be waiting for a breakout of this structure completely to the downside. If it breaks to the upside, we will be waiting. In most cases, you will see the price first will break out to the upside, create a false breakout, and then it will start to trend down. So with that being said, let's replay. Okay, we see that the price is now just consolidating in this zone. Okay, we saw a breakout from the structure, but it's still not yet. You see, this is the bottom of the structure. So if we draw, let me delete all of them so that we know clearly the structure level. So this is the structure. Okay, still it didn't break out. You saw, let me draw the structure. Still it is in between the structure. Okay, so still, okay, it's breaking out. We saw that it is kind of breakout, but it's still, you saw this level is still intact. So we need to wait to see fully breakout. You see, it's consolidating, it's trying to break out. Now it is going up. Okay, let's see what happened. Okay, we saw that, you see the structure now broke to the upside. Because it didn't break this level, we haven't entered yet. Let me wait, we need to see, let me draw the horizontal level as well so that you know that we need to see breakout of this level, then we will consider shorting. And you need to patiently wait until it breaks. Either it will continue to go up, then you will not be trading until, okay, it looks like it may not break. So let's see what happened. Okay, now you see that it's coming down, okay, it might go up. Let's see what happened until it, okay, you see that the price, now look at this, it broke this structure completely. Now it broke. Now what we can consider now going short. How you will do? Just below the structure, this is the structure, below the structure you will place your pending order. Now where will be your stop loss? Stop loss must be above the whole structure always, and then you will target 1 to 3 risk to reward ratio. Keep in mind this is 5 minutes time frame, so even if it looks like a big structure, it is in fact not a big structure on the higher time frame. Okay, so we'll target 1 to 3 risk to reward ratio. Now let's see what happened. Okay, you are triggered on the pending order. Okay, let's see. Okay, so you have to be like that, you have to be very stubborn. It hit the profit target now, so you got another one. Smash the like button now. Now let's see another example on the bullish market. Okay, so before we see the bullish example setup, let's review the rules, the same rules for the bullish setup. Same thing, when you will see an uptrend, okay, then we will be looking for the same time on the 4-hour time frame, we will be looking for a bullish engulfer. Okay, so how the bullish engulfer will be? Exactly the same as bearish engulfer, but just the opposite. We need to see the previous ones cross completely, previous ones crossed the previous high completely, and also the closing also need to close completely, so cross completely. So we need to see a bullish setup, bullish engulfer, that is completely engulfing the previous candle, then it will be considered as a valid setup. So once we will see this setup, we will go to the 5 minutes time frame and wait for the structure to be broken. I think that now you are getting understood clearly. Smash the like button. Now let's see the same example on the bullish market. Okay guys, so let's see this example, same on gold, but this is now bullish market. This is 4-hour time frame. It's a clearly defined uptrending market. You see the price is creating a series of higher high and higher low. There is no question about it. And then at some point the price broke down, but still the market structure is valid, and then started to push up again, creating a bullish structure. So let's see if we can find a candle in this market. So let's find out how we saw the two dodges created. Okay, we exactly found what we are looking for. Look at this green bullish engulfer. It has crossed the previous one completely on the lower side, on the high side completely crossed the high, and also closed the previous one past completely. And also this candle, this bullish engulfer, formed in an important area of value. It doesn't have to be a key level on the daily, on the weekly, just on the 4-hour time frame. We saw previous support here. Now this is also acted as a support, and this bullish engulfer formed in this level of support. Trend is up. So once this candle close, jump onto 5 minutes time frame immediately. Okay, now you found this is the 5 minutes time frame. Now before we jump onto 5 minutes time frame, let's zone out this bullish engulfer, so we know that high and low of this bullish engulfer. Now go back to the 5 minutes time frame. Now what we will be doing here at this point, as you know, that we will be looking at the first of all the structure. So what is the structure here? It's a clearly seen, you see impulse, and then created this structure. This is also a bullish price action pattern, you know that very well. Okay, so this is the bullish price action pattern, and what we will be doing after this bullish price action, as you know, it could break to the downside, false breakout, but finally it should trend to the upside. So if this structure break to the downside, we will not do anything, because at any point it may continue go down. Okay, so that's why we will not do anything. Once if it break down first, break to the downside and then started to go up, it is better for us, because it will create a false breakout with high probability that it will continue to the upside. But anyway, once it will break this structure completely, then we will be placing pending order here, keeping stop loss here, take profit to the upside 1 to 3 as we discussed. So now let's continue. Okay, we saw that already broke out of the structure. Okay, so the price broke out of this structure with this 5 minutes candle. You saw this is the clearly broken out. So let's now place our pending order. Don't be impatient. Don't buy directly from here. You say, oh my god, the price will open with a gap, I might miss the trade. Don't experience FOMO. FOMO is a big killer of our trading account, and especially when you are scalping, you have to be very disciplined. You have to stick to the rules A to Z. So what you will do, just in this gap area, because this gap area is where the above this resistance, so put the entry order here, keep your stop loss below this market structure. This is the lowest possible structure, and then what you will do, we will be targeting 1 to 3. Okay, 1 to 3. Let's see if we can win or we lose. Let's find out. Now let's replay. Okay, so from that, in the next candle, still you didn't trigger. You could trigger or it could leave us. Okay, so we saw that the price came here, triggered, and started with a bullish candle. So we might win the trade. Let's see what happened. Okay, let's see. Okay, looks like it will start to continue to go. Okay, again it came down. So let's find out what happened. As I told you, that's why we need to have a high risk to reward ratio. Let's see if we win or lose. Okay, we saw that the next one started to create a bullish pattern again, created a bullish engulfer. That's how you have to be patient. Okay, whatever happened, create the setup and then forget it. Okay, let the market do its job. Your job is to do a proper risk management. Okay, so let's see what happened. All right, look like, okay, so it exploded to the upside finally and hit your 1 to 3 risk to reward profit target. Smash the like button. So we have seen gold with both kind of example. Let's see now another currency pairs, how it perform in that currency pairs. Okay guys and girls, so let's see this example on GBPJPY. Same thing, 4-hour time frame. Okay, so as you can see that the price was, this is a downtrending market on the 4-hour time frame. Starting from here, we saw the price broke down, created this consolidation pattern, again broke above, okay, to this level of resistance on this 4-hour time frame, and the price is now breaking down again. So what we will be doing is waiting for a candle that we are looking for. So let's replay the chart and patiently wait for this kind of setup. Okay, so we exactly got one. You see the price first broke down, created a slow retracement, and then again breakdown. So in the second breakdown, what you saw, that you see this red candle is exactly what we are looking for. Crossed the previous ones completely, created a false breakout, and then closed below with a strong bearish engulfer. So crossed the high, crossed the low, and also closed past the previous one completely. Once you found this 4-hour candle, the next thing is go to the 5 minutes time frame. But before you go, just zone out this whole body so you know that the range where this candle is formed. Once this candle closed, don't be impatient. Patience is the key in trading. Go to the 5 minutes time frame. Now once you go to the 5 minute time frame, what I told you, what you have to do, find out the structure. Every structure is different. So what you need to do next is patiently draw the structure. So you saw there is an impulse directly like that, okay, and then it has created this structure on the 5 minute time frame. So most of the structure always identical, something like this triangular structure. Okay, so impulse, and then you see this is a triangular structure, created a breakout to the upside, again came back to the range. So what we will be waiting for next in this 5 minutes time frame, a breakout of this structure to the downside, because it's a bearish price action. We'll be considering only selling. If it breaks to the upside, we will be waiting in the sideline. Once it will break out, then we will place our pending order. So let's see what it does. Okay, we saw that breakout and then closed above. We will not take this until we see, okay, we saw now a clear breakout of this structure. Now one thing we need to keep in mind, you see, when you see this kind of breakout, you see in this 5 minute time frame also a same kind of bearish engulfer is formed. You see it crossed the previous one completely, crossed the high. So when you see this kind of breakout, you can go by market, because at any point it will just melt down most of the case, because it's a very strong bearish price action. Only in that case you can go short directly by the market. Keep your stop loss above completely the structure, and in that case as well we will be targeting 1 to 3 always. 1 to 3 no trade, less than 1 to 3 always keep a high risk to it. Okay, the price went above. In fact, see, if we give a pending order here, this could trigger. So let's see what happened next. Okay, it started to move up, it could hit the stop loss. Let's see. Okay, now start to push down. Okay, finally broken. You see, this is what trading, you have to be like that. You see, I thought that it will fall down, but it finally went above, but still we are safe because the stop loss is above this high, and you have to be patient. Okay, so let's see what happened. Okay, the price is dropping and almost there. Don't take less profit. Okay, smash the like button now. Now we see that it also hit the profit target. You saw, this is the power of this scalping strategy, applicable in gold, applicable in GBP pairs, in any currency pairs, any indices, anywhere you can use this strategy. Now let's test this strategy in another different currency pairs, then we'll wrap up. And make sure you watch everything so that your mind gets programmed completely. So now let's see this example on Aussie dollar. This is also 4-hour time frame. Let's find out what kind of situation it has. Now what you see, that you see Aussie dollar broke down, created a nice double bottom. This is a clearly defined reversal pattern, and we saw that it's strongly breaking to the upside. But until it tests this previous resistance as a support, we can't say that it is in an uptrend. So let's see if it happens or no. Let's try to replay. So we saw a doji. Okay, now with this doji, after this doji, this is what exactly we are looking for. You see, this is a nice bullish candle, tested this previous resistance as a support, closed above with a green candle, crossed the low, previous low, crossed the previous high, closed as a bullish engulfer, exactly what we are looking for. Now uptrend, so we found the trend is up, we found a bullish candle. Next thing is jump onto 5 minutes time frame. Okay, so if we go to the 5 minutes, now in this 5 minutes, what is the next thing is to identify the structure level. You see, this is the biggest move to the upside. So draw this structure level, this is the structure level, and draw this triangular pattern. So what you saw, that the price has created this structure. Okay, so when you see this kind of structure, what kind of, it's a clearly bullish structure. But in this bullish structure, most cases you will see a breakout to the downside as a false breakout, because it's a bullish structure. We finally expect it to break to the upside, but it might break to the downside as a false breakout, and then we'll start to push up. So until it finally break to the upside, we will not go for any entry. So let's see what happened. Okay, we hope that it will break down. That is more confluence for us. Okay, it look like it is breaking down. That's what you want. Okay, now it is pushing up. Until we see breakout to the upside, we will not do anything. Okay, all right, you see now slowly picking up. First it broke down. Okay, you see it broke down. That's what you wanted. Let me draw the new structure. So now this is new structure. Okay, now it is breaking up. Okay, so let's let it completely break out and then come for a retest. Okay, all right, so now it's coming for a retest. Now let's put our long entry. Okay, it broke out, now retest, let's say here. Okay, just above the previous structures, and then put your stop loss below the previous structures low, and target will be 1 to 3 risk to reward ratio. Let's see how it goes on. Now let's replay the chart. Okay, it triggered, but it could even hit our stop loss. Let's see. Okay, it started to push up. Okay, see, you have to be patient. You have to keep faith and patient, and at the same time manage your risk. Okay, all right, hit your profit target. Smash the like button now. Now you saw that how this strategy will work. So let me recap everything before I finish. Firstly, you will find the trend and then wait for a bearish or bullish engulfer, specific kind of bearish or bullish engulfer. Once you found that, jump onto 5 minutes time frame, identify the structure on the 5 minutes time frame, wait for a breakout of this structure completely, then place a pending order, and then keep your stop loss completely past the structure. Target will be 1 to 3 risk to reward, patience, and make money. Hit that red subscribe button if you haven't done yet. So this is the strategy. Now, to make it more easier for you so that you can understand, you can program your subconscious mind by practicing over and over again, I'll create a summary of this complete strategy, and I'll put a link in the description area so that you can download it, print it, study, keep it with you whenever you find this setup, whenever you are using this scalping strategy, you can use that. Make sure you backtest quite a few examples more so that it become ingrained in your brain, and then you can use this strategy. I sincerely believe that this video was helpful to you. If it is helpful to you, don't forget to drop a comment to help this idea. Before finishing, don't forget to watch these 2 videos as well.